Shares of Ford and General Motors rising on Thursday following some pretty impressive sales numbers. Are these stocks, though, good investments for you? Let's talk stocks with the Trading Nation team. Today, that is Matt Maley of Miller Tabak and Boris Schlossberg of BK Asset Management. And what's interesting, Matt, is that, and I ran a sort on this yesterday, so the numbers may be a little different today, but you get my point. 500 stocks in the S&P 500, obviously, and then there's GM has the lowest trailing PE at 3.9 of any of the 500 names in that index, literally single lowest. Why do you think GM is getting no valuation love?
Well, it's interesting. One of the reasons why I wasn't getting that is that there's been a lot of stories lately about, or in the recent months, I should say, about how used cars prices have been coming down quite a bit. And at some point, that usually there's a little lag effect, but that usually impacts the new car sales as well, and not only their prices, but their margins and their sales. So I think that's part of the reason why it came down. Now, of course, we've had these incredible rally today, which is very, very strong. But if you look at the short interest on both GM and Ford, especially GM, that is accounting for some of this rally too. So it's some good numbers, but there's some artificial stuff in there as well.
Yeah, Boris, what's your take on Ford and GM? I mean, good numbers, but again, valuation. And Ford, by the way, wasn't far away from GM on its valuation. Exactly. I understand it's trailing, but you get my point.
Right. So I think they're caught between two opposing forces. On the one side, you sort of have the bears who basically argue we're at peak cycle, and as Matt was saying, replacement is not going to be nearly as strong, and generally forward demand may not be as strong as the market thinks. On the other side, we have this incredible undervaluation, and with the market itself so far ahead, has run away so far on a PE basis, this could be simply a relative value trade, and that's the reason why they're catching up. It's just basically people looking around saying, this stuff is the last stuff that's cheap in the market, let's buy it.
Would you buy it?
At this point, yes, because ultimately they actually are a relatively good valuation measure. And yes, the growth, I think, is going to be more tepid going forward. But if you sort of bet on the fact that we have another 6 months to maybe perhaps a year of continued GDP growth, especially with the stimulus impact that Trump may bring to the economy, that could be good enough to carry those stocks forward for the next 6 to 12 months.
Okay, Boris and Matt, looking at the automakers, guys, we appreciate your views. Thank you. Folks, thank you for watching Trading Nation. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.